These are in listen-only mode.
Hey traders, what's going on? Jamie Saettele here. It is May 25th, 2016. How is everyone today? Towards the end of May, first 5 months of the year. Just about in the books, pretty crazy. So let me know, just give me some indications that you guys can hear me. Please let me know that. Okay, good. All right, got a couple responses there. All right, so we'll start with the dollar. As boring as it is, the dollar index. Now the FXCM dollar index hasn't really done anything because it's been kind of evened out, right? You have 200-day averages up here. You've got the euro on one side and yen on, yen and euro, I should say, on one, kind of being evened out by the pound strength. So really the net result has been just, straight sideways. But this is resistance that hasn't changed. We've kind of been at resistance really since the 19th, which I guess was last Thursday. So, we've been at resistance for literally a week. And, on a net basis, we're at the same levels that we were on the 13th, right? So, I'm looking lower in dollar. And that's still, I'd even allow for a spike up through this thing, right? We've seen spikes in this market through this line before, right? And then you've gone into reverse fairly sharply. So nothing has really changed as far as I'm concerned with the dollar. I don't know if the next move, I should say, is in this index is lower as far as me wanting to play it, right? But if you start to sell off, then, is this like an A, B, and then we get higher C at some point in the summer, right? I mean, the seasonality charts are pretty clear. Like, and we've been following the seasonals, just it's been pretty spot on, right? I mean, weakness into, through April, strength through May. Seasonals really start to turn down. This is the ICE dollar index, but they start to turn down next week for every time frame. 5-year actually already turned down, but every time frame turns down at the end of the end of next week. See what obviously I don't have as much data for this. Data only goes back like 15 years or so, but the 15-year seasonality for US dollar actually turns down now, right? So it's bearish now, and that would be, that would obviously take into account Aussie and pound. Aussie's not even in the ICE dollar index, and pound is a very small component. So you've got much more kind of general dollar stuff here to look at. So I do think it's the right move to be kind of just bearish the buck at these levels. Let me see something real fast. I like to run a 4-hour indicator thing here, see what's up. All right, so nothing that exciting. We do have hourly divergence on CAD, on dollar CAD down here. Right, you can see divergence, like divergence into the top, divergence. This is hourly chart, so this is really short term, but it's good for entries. Can be helpful. All right, so back to the dollar. So yeah, just kind of looking lower in the buck, um, from nearby. Let's then go to the euro. Kind of reminded everyone of last night in the update, the swing update. I think we're getting pretty close to pretty big deal for the euro as far as a test, maybe a really big low. Again, you've got 1145. It's the close from 311. Okay, it's a big volume day. It's the day after ECB. You had big volume on 311, and we've traded around it the last 2 days. Virtually unchanged from 1145. Okay, so the long-term page has kind of done a pretty good job of updating on um, the big happenings in this, looking towards really the big buying opportunity is coming up. I do think maybe it'll be next week. I don't know. Maybe early June potentially. But 11 sorry 1060 to 1060 1070 or so is really the spot. You do have 111, which is now where the 200-day average is. I'd still look closer at 110, 60, 70, and you can really see it really clean, on the weekly chart, right? And 4 weeks down into supports 55-week average, virtually the same thing as the 200-day, right? But it's just precise resistance. This one was in August and in October. So, to me, it's a behavior change here going through it, and watch for this to provide support. And it's nice that it's in line more or less with slope support that we'd be looking at. And of course, horizontal supports. So, it'll be a good idea, I think, to take a look at headlines, right? Really coming up over the next, over the next few days to week and a half or so, right? And see, if we get some nasty euro prediction type of stuff, right? In fact, why don't we just do that right now? Let's take a look at euro. We'll look at euro news. Euro for the record. See, oh, so there's an Economist article. Don't see what that. You want to see? There's really nothing exciting here, is there? As far as you want to see the prediction stuff in it, right? You talked about that a lot. You want to see, an article like the euro is poised to go to parity again or something, right? That's the kind of stuff that is just super bullish when you're coming into support, right? And those are those proclamations of doom and gloom and whatever. Those are the best. So we have sorry. Yeah, so we don't have anything like that just yet. It looks like I didn't see it. You want to see it right on the top page of the Google News stuff. We don't have it yet. So we'll see. All right, so euro, that's it. Shorter term stuff for euro. You could squeak out a few things here and there potentially. I mean, this is let's go to 60-minute, but pretty crazy. This has been just the trend line here. That's all this is, and it's been following it, super well for a pretty long time now. And even the median line, we've bounced on that a few times here. So, if you wanted to try to squeeze something out on a really short-term basis, I mean, I guess you could try to trade into short-term stuff. It looks like 1175 or so, 1175, 1180 as far as resistance is concerned. Keep in mind, we've opened the week at 112.03, so we haven't done a whole lot here. Now, Friday there is GDP, so maybe you can get some stuff, US GDP, so maybe you'll get something there. Big support, it's 1050, 60, 70 down here. Okay. Now let's say that if the market were to, let's say the euro, if it were to pop through here, okay, few things. One, you would have, uh, 112 is resistance because you'd have the weekly open. So, if you were to push up through there, maybe come back, you'd want to see this trend line tested as support, okay, before considering a long position. That's important. Okay, otherwise you're just getting caught buying a bounce in a downtrend. Okay, irrespective of if I think the market's going to go a lot higher, you still want evidence, to support your position. So we're getting close. Just at this time, just not quite ready, but we're really, really close. Okay, so there's euro, pound dollar. I think it's got plenty of upside potential here. I mean, here we got the year open test here again today. So a push through here would be a big deal. 200-day average is here, 147.80. The 149 trend line from 2014 high, that's kind of a minimum area. That might be where you get like the first meaningful pullback, would be up here potentially, right? And then maybe the year open actually becomes support at that point, right? I'm just kind of playing, just speculating on, the future moves here. But I mean, this is really bullish, guys. No one wants to believe this rally. I see people talking about, bearish pound, bearish pound, bearish pound. So, I mean, there's a lot of short interest out there. Okay. And, it doesn't take a lot, right? You just see some news stories like Brexit stuff. It's not about necessarily the news stories as it is the market or a market being in position to accept an advance, or a market being in position to be able to go down, right? I mean, like, look at the euro, for example, and the Japanese yen, funding currencies. Why have they just kind of dripped lower, right? It's kind of the same situation. It's because there was kind of panic, right, into these highs, panic into the lows, and dollar yen. Those markets are driven, these moves are driven by people exiting these trades, not necessarily getting into them. And I think the same thing could be said about the British pound. You might have this trade being more by people exiting these positions, right? Rather than getting into them. In other words, exiting shorts. You might have some new longs come in as news like this, the Brexit stuff, comes out. But in order for a market to go up, it's got either, big time, there's got to be a lot of people caught on the wrong side. Okay. So that's what, that's kind of the stuff we're looking for, and seem to have found it here so far. Near-term picture, like where to look to, where to add more on this trade. Well, I would look to do so. It's a 60-minute chart. Hold on. 60-minute chart here. If you draw a trend line, okay, here, this is like your new slope to potentially work with on a shorter term basis. And you can see if you, just take a parallel there, okay, you do get some good, whether it's here or whatever, okay, support, and then line it up with, kind of former highs, lows, horizontal levels, combination of horizontal levels and slope, a beautiful thing. And you got over here too, okay? So I'd be looking at this basically, I mean, maybe you get a pullback from, maybe the pullback comes from up here, right? If the pullback comes from up here, it gives you even more confidence that this would be the right spot in order to, to add to your trade. And when would that be? This lines up, it looks like. Looks like this lines up Friday, anywhere from Friday into, no, sorry, Thursday and Friday. So that could be a possibility. Again, this, the resistance up here, potentially channel. I mean, it's pretty much in line with the high up here. And those of you that traded pound for some time, you know that this likes to, cable likes to take out highs, lows, pull back from them sharply, all kinds of good stuff. Anyway, but bottom line here, I'm very bullish pound. I think pullbacks, should be bought, and that the first real test of this, look, the year open, that's nice and everything, but the first real test of this is going to be the trend line up here. It's, if you get there tomorrow, it's like 48.90. I mean, it does decrease a little bit each day. It's a declining trend line, but that's where, I think the first really big test comes into play. All right, for this pound. Now, I mean, if you get above here, I mean, you're talking big time potential, right, for behavior change. And also, there is an interesting, notice this cycle. Check this out. This is fun. So there seems to be a cycle going on more with lows, not necessarily with highs. Look at the black. You see the black circle, okay? Black circle, 121, okay? 27 days later, 229, day of the low. 27 days later, okay? 4/6, day of the low. 27 days later, 5/13, low was the next day, so the closing low was that day though. So you're getting 27-day cycle lows this year, actually, in cable. That means the next big low is 6/21, June 21st. Well, I think isn't the Brexit vote on June 23rd? So I don't know, if you're going to make a low, but look how, the bullishness that you got going on here in this pattern, it may be that you end up instead with inversion on that. In other words, you might get a high on the cycle instead of a low, right? We've seen that happen a couple of times this year with some pretty big long-term cycles, right? We've seen that happen with the Australian dollar. We talked about coming into big lows, and we were looking for potentially a major low at some point around the second or third week of April, ended up being the high, right? Up above 78 instead of the low. And that had, that cycle had marked lows going back decades. So, something to consider. The red line is actually near the highs, right? So what this one has, you can see here, you've got, this one is 31 days on the cycle, and you can see the high here, 2/4, 31 days later, 3/18, 31 days later would put you at 5/2. The high was the next day, closing high was that day, and then 31 days from there puts you with a high on 6/14. So basically, June 14th, cycle high date, short term, and it only relates to the last three highs, and then 6/21, which is the cycle low date. Anyway, we'll see how these things play into in the market as we get closer to these dates. If you're ripping higher into, June 14th, and we end up, we're at big resistance, that would be something where, okay, let's get out of this trade. And then, maybe you get a correction that lasts a week, and then it tanks into Brexit, and then you look to buy it on there. That's the kind of stuff that could happen, right? But beautiful looking chart as far as the basing pattern is concerned. for pound dollar. Got a beautiful pitchfork, just all kinds of, great sentiment for a rally. Everyone hates it, blah, blah, blah. So yeah, just good stuff all the way around. Okay, so that's cable. Yeah, my notes here, all I wrote was, pound dollar. I want to see support near 46.40s now, basically. So usually I go right through the dollar majors, but since we're on pound, why don't we look at some of the other pound crosses, right? We'll start with euro pound because we just looked at euro and we're thinking that euro's coming into a low, preparing for, some sort of a big low. We'll check this out. Here's euro pound. This is presented this chart on Sunday with some of the other pound crosses. We have come into downtrend support. The big support for a bigger, more lasting low, and again, you've got the head and shoulders pattern here, okay? This head and shoulders pattern has a target of 73.52, which is actually 20 pips below the year open at 73.75, but oh, 2 equal legs. Look at that. I did not even realize that. So you come into support now, bigger support from the slope perspective, and like horizontal levels, lows down here at 75.24. Okay. And you've got the slope perspective there, June 1st, 75.25. Okay. So euro pound still could go a little lower, but might chop lower. And I don't know if that's because of euro or because of pound or because of both, but that's where I'd be kind of looking, euro pound. Lines up well with an S&P peaking at some point next few days up near, June's historically the second worst month of the year for the S&P 500. Let everyone get chopped to bits in May trying to trade it and then go short for June, basically. The way you want to do it. Daily chart, euro pound. Same chart, okay? But just so the 200-day average is here too. Okay, so 75.20 area, 75.20s. Again, lows from late January, early February lows. The February low, 75.24, 200-day average slope. Lots of stuff around there for long euro pound position. Will probably be me. I'll probably just be wanting to buy euro at that point. For the seasonally bullish month in euro and bearish month for dollar in June. Okay. Moving on to other pound crosses. Pound yen. Still like the upside, probably like the upside until like 174. I don't know if we're going to get down into this area anymore. Look, the year open at 159, or year open, the week open at 159.68 is the ideal spot to buy this, but I don't know if you get down there anymore because dollar yen, well, you'll see when I talk about dollar yen might stay elevated at this point because it hasn't really done a whole lot, but can't really chase here. 161 looks like it's support now for pound yen, right? You can see here pound yen. It's resistance support last night. So yeah, I'd be looking at support at 161 now for pound yen. This is a trade that you really do have to have pretty big stops. 161 support, but then like 159.70 is also support. Really, the stops have to be below 158. I know that people don't like that. They want, like really tight stops, but this is one of those opportunities there. You really can't have a super tight stop. So yeah, I'd be watching for 161 support, especially if it's in conjunction with the median line of the of this channel here. Let's see if I can clarify things a little bit. All right, so let's see if we were to do this. I'd want to watch, I would want to follow. I mean, you could go off of this here. Basically 161. I mean, I guess you could look to buy 161 on weakness into here, which would be, I guess, around tomorrow at some point, with stops under 160.40. Okay, you could do that, but then you have to understand that that doesn't mean that the market's not bullish anymore. It just means that you could dip into 159.70 or so, and then you could go higher again, right? So by like looking to buy here with a stop here, what you're doing is essentially hoping that the market doesn't run a full correction, into 59.70, because if you do, it could be a quick drop down here and then a quick rip, and all of a sudden you find yourself stopped out of a good trade. So really, the invalidation point on this is 150, is still here at 158. Okay, that's all. So either way, I'll look to do some work on it tonight. Think about it. Let's see here. Other pound crosses. Pound CAD, obviously quite interesting. We've talked about this a little bit. Sunday night post talked about 193 as resistance. Today's high is actually 193, exactly 193. So you could get a pullback here. Still be watching for this line, basically former channel resistance to find support. And I mean, you got lots of pullbacks off this, and interestingly, if you were to get a pullback into here over the next day or two or whatever, it would put you right back at the week open, which is 190.12, right? Very close to 190. So that's the area I would watch for support. My guess is that most of this pullback will probably be in dollar CAD rather than pound dollar, although pound dollar could come back a little bit, as mentioned, talking about I want to see 146.40 support now, but dollar CAD, we'll look at that in a little bit and kind of looking maybe for support, maybe not quite near 29.90, but maybe closer to 130.10, 130.15 or so. So that would, dollar CAD right now is 130.60. So, a pullback to that area would probably put you closer to 190.10 or so for pound CAD. Okay. Let's see here. That's pound CAD. If I look at the daily of pound CAD, it's actually pretty wild stuff here. So it's not inconceivable that you actually get like a really big high up near 95.50, right? We've got a bearish parallel, upper parallel here, okay? The only reason I'd pay attention to this bearish upper parallel at this point is the fact that it showed support on the lower parallel down here, so it could show resistance on the upper parallel, and you also do have another, the slope line, it's a 50 line goes all the way back. It's been resistance, support at times, all the way back to 2011. Okay, even back here, support last June. It's June 2015. Funny enough, that's June 9th. You could be at the same line on June 9th. And 200 averages up there. It'll be a little lower probably by June. Anyway, but the immediate trend is higher. Okay, pound CAD's higher. Dip, looking for that 190 support near the week open, and then maybe continuation up into 190, 550 or so before you think about maybe a big top. And then if you just look at it from a kind of a traditional technical perspective, right? Like a classical charting type of perspective. This could be a head and shoulders top, right? February 2015, kind of double top action, August 2015, December 2015, right? And then up here. So pure speculation. By no means do I say go short at this level or anything right now. Looking way ahead here, to be clear, the move in pound CAD is to buy a dip, okay, from my standpoint, right? I mean, looking at around this 190 area or so, and then that looks to take it higher, 95.50, okay. So that's how I'm looking at this. But again, just thinking ahead, kind of having a sense for what could happen, what's possible, or what markets look like before they do something really big, and that wouldn't be inconsistent with a substantial topping out process, right? Especially if you get the blowout in pound into June. All right, so those are the pound crosses. Move on to Aussie. Not a whole lot to say on Aussie. I mean, you know what I'm thinking here. I want to be long. I want to be bullish. I was hoping we'd have this 7130 area by now. Look, you could have a low in place. You do have 13 waves down. Okay. It wrote the other night. We wanted one more low before the low is in place, so it could be in place. It's quite possible. You do want to see, I think, like, so this, former kind of channel here, right? Resistance, resistance. This could still be resistance. Okay. In fact, it's in line with last week's low, about 72.44. So you could get kind of a 72.40 resistance. All right. From my standpoint, if this market trades above 72.59, I'll say a low is in place and that we're going back to 74. Okay. I'd like to see a dip into 71.30, 71.40 at this point, 71.35, and then be able to get long on that, head higher, for 74, maybe higher, but 74 would be the first area, just because that would be where the origin of the ending diagonal is, as noted the other day in the swing update, right? 1, 2, 3, 4, 5. Okay. So that's complete at that point. So upside risk here is there, all right. And I think we head back to 74. Question is, do we go to 71.35 before that? So that's all. What about Aussie? Let's see. Kiwi, it's every day I seem to look at. I look at it and I wonder if I'm connected to the internet. I'm like, Kiwi is perpetually at 67.60. I feel like it's been at 67.60 for like 10 days, and it pretty much has. We've opened the last 2 weeks at 67.60. So look, either this is going to get stopped out and trailed out at 68.15, or it's going to continue to go lower and you're going to get stopped out at a lower level on a trail, or it's going to end up meeting its target or whatever. But all I'm doing is follow. I'm just following these slope lines. That's it. Okay. I have no reason to get out of this trade as long as it's below this high, which is 68.06. Okay. It's not really, market's not really doing anything, but just, there's really no reason to get out of the trade either. Let's see if we have, what's on the calendar. Tuesday, Wednesday. This is Wednesday, isn't it? Wednesday. Thursday, you got GDP in UK. U.S. durable goods. Friday, U.S. GDP. There's like nothing really on the Kiwi side of things. I mean, it looks like the only big things that you've got going on the rest of the week are actually cable, GDP, notwithstanding any sort of Brexit stuff, but cable GDP, and durable goods in the U.S. Now you get yen CPI, GDP in the U.S. So for the most part, just a couple U.S. things, UK, and Japan. But yeah, so Kiwi, I mean, that's it. I wouldn't really add to the trade right here. You could like try to sell at 67.80, stop up here 68.15, double up on the trade or something, but it's just not really doing much. So I'm just kind of not going to do anything either. You could look at Kiwi too, like, I don't know, you get this, I'm just kind of looking at it from this standpoint, since the 10th. I mean, we've got 1, 2, 3, 4, 5, 6, 11, 12. I mean, we're going into like the third week. We're like in the third week of consolidation, right? And you could look at this as a consolidation after a move down. And these types of consolidations, if they play out, will typically be about halfway between the move. So, you get the move down from, measure from the breakdown level, it would actually put you all the way down here. It's actually below where we'd be looking at a target. I'd still be looking at this trend line, which again, if we get there by at some point in early June, you're talking about 64.80. So from a trade standpoint, I mean, the reward to risk is still fine. Stops above the high here, 68.06, targeting down here. You get taken out, so what? And at that point, you might go back to the drawing board and you might get a move up into 68.80 or so and then go lower from there. I mean, we'll see. So either way, it'll clear up sooner or later. It always does. So that is Kiwi. Dollar CAD. Same thing here. It's just that the trade, the entries probably needs to be a little higher at this point because you're not going to get down to, if this is going to hold as a bullish trend line, you're not going to get down to 29.90. Okay, you're probably going to be closer to 130.15 or so, which is just the high here, right? On a bigger picture, like daily chart. Kelly asking, missed dollar yen? No, you did not. Bigger picture, again, dollar yen, you could end up getting the failure at 32.95, 33.25. There's a lot of stuff up there, as I've talked about in the recent, I think I talked about it last week. I know I talked about it a lot in the recent updates, but you want to buy, or I want to buy. I can't tell you what you want to do. I don't know what you want to do, but I want to buy it on this trend line still, right? It stays bullish there. Stop still got to be below 28.90. That's the breakout bar, right? But really, the former resistance with the trend line, okay, as we all know, that's the best as far as support resistance is concerned. It's 29.90 at 130.15. So you get that, send it higher. See where the 20-day average is on this, because we all know that the dollar CAD likes its 20-day average. 20-day average is a little lower, 28.90. Unfortunately, wish it was higher, but it will be higher over the coming days. So maybe it will sneak higher and you'll get support on the 20-day average. But yeah, my idea, plan, bias, whatever you want to call it, has not changed. I still would like to be buying dollar CAD into support, into the breakout level, support, and then looking for that 33 area or so. Still think 38 is a possibility down the road, but you probably will see a pretty good response at 32.95, 33.25. It's just a lot there. Okay, again, just a ton there. Former highs, fib levels, measured levels, 200-day average. Just a lot of stuff going on there. So it's one of those levels you don't want to argue with. Dollar Swiss, pretty much the opposite of euro. I mean, at this point, like I'm looking lower in dollar Swiss here, but okay, low here, right? Wedge, breakout. Looking lower here, support former, 97.86, but basically the support you want is the trend line, in my opinion, okay? And even better if it chops into that level, maybe it gets you down into 97.25 or so, which is weekly reversal support, actually. So yeah, for all, for my purposes here, like for trading, I'm probably not doing anything in dollar Swiss right here, but I do think that it's at risk of kind of taking a dip, okay? Whether it dips here, it's just like euro, right? Whether it dips here or whether it dips after a run at parity, which is the year open at 10007, okay? It's one of those. I'd be more inclined to sell it at the year open, okay, than sell it here, right? One more push and then lower. Okay, I don't know if that push is going to happen, but I'd be more inclined to sell it at 10007, which again, the year open, great reference point. We see it happen all the time. You can get really good moves off that year open price. And it's the same thing as euro, right? Euro could go higher here, but then end up flushing down into 110.60, 70 at some point. Down into June, early June, late May, whatever. So. Well, it kind of is late May, but maybe early next week. So that's dollar Swiss. Nothing on the immediate front as far as trading is concerned. Okay, dollar yen. So my thinking, as you know, earlier this week was that dollar yen would end up potentially getting down, eventually down into, and this could still happen. Okay, you could still get down here. You are at resistance now. Okay, so I'm looking for a pullback here in dollar yen. But the thing is, at this point, the pullback might be a little short. It might be shorter lived than I had thought. So you could end up having a pullback that basically just takes you into 109.70. All right. If you get below there, then okay, that opens up the door. But dollar yen's held up, median line resistance. The short-term slope here, okay, which is all it is this trend line. Okay, you have to be aware of, just because you trade it below this does not mean that this doesn't work anymore. Okay, it still can work, and you extend off of, the supports that were registered down here. And the fact that you have an intersection, okay, with this line, which was clearly, resistance for a time last night, and then support for a time last night, okay, means that it could be support again. So that's why I'm saying pay attention to 109.70, former horizontal levels, of course. At 109.60, 70, whatever, I'd pay attention to that for support in dollar yen. Okay. So that's, my key. It's the same thing with pound yen, right? Like, I don't know if the pullback's going to be to 161 or if you're going to get that 159. Either way, I'd like to be long into the levels. Okay. Like, I can't predict what's going to happen. I just know the levels to pay attention to and watch. And at this point, I see this as a big level. Okay. Another thing to consider when you're trading, yen is the Nikkei, and the Nikkei is turned up, and we've broken through resistance, and this was resistance that was very tight from May 10th through now. So this could be a breakout, and if you get a little bit of a pullback here to retest the breakout level, which is just the horizontal level, right, at like 16,800 or so, you get a pullback there, and then this takes off again to the upside. That means dollar yen probably pulls back to 109.70 and then takes off on its own right, right? Rather than getting a big, huge flush lower. Okay. And ultimately, dollar yen upside, you're talking like 112.20, right? 111.90, 112.20, and then 114s. Eventually, dollar yen upside is probably up near one, breakdown level, up in the 115s. Okay. Eventually. But yeah, this is resistance here. Okay, so you want to see a pullback and a hold at 109.70 or so, right? Basically, these former highs up here, you want to see that. Otherwise, you are at risk of pulling back deeper. So all I can say on dollar yen is, man, watch the 109.70 area for support. It's kind of the make or break spot, I think, for dollar yen. So dip. I want to see a rally attempt off of this to stay, with an uptrend that's been going on now for a little bit. What else do we got going on here? Dollar yen, S&P 500. We should look there. Kelly asking about dollar yen. That should be tonight. I mean, look, if I knew where the market was going to trade all the time, I'd be a billionaire. But my guess would be if this is going to pull back, then yeah, probably tonight, just because that's when the intersection is. Again, these are when the intersections are. I can't say that it's going to happen or not. I'm just saying that, sometimes you get it that specific, and sometimes you don't. Yeah, I just don't want any. Don't think that I have like some. Don't ever think that I know what's going to happen. I mean, that's because you get a false sense of security, right? If you get a pullback here, and it looks like this is, if you're going to get a pullback, you're going to get it here. I mean, this is a great place for a pullback. You got median line, you got all kinds of stuff up here. Resistance, it's all kinds of stuff going on up here. Okay. So if you're going to get that pullback, then yeah, it needs to happen right here. And 109.70, is the area that needs to hold in order to go higher. That's all I'm saying. So like from a trade standpoint, let's say you come into this 109.70, you make a little bit of an hourly reversal or something or whatever, then you can take a long with a stop below it. But make sure there's that stop below there, because if you go below here, you might actually want to be short for a move down to much lower levels. That's all. That's dollar yen. And there was something I wanted to show. Oh, I know what it was. Okay, so check this out. It's 55-day. So we're testing the 55-day average, which is what this is now. 55-day average has actually been like at times pretty decent, like for trends. It's been support. We were near it up here, this was the negative interest rate BS that went down. Yeah, whatever. It's another reason that this is resistance. You just have the 55-day average. That's all. Eventually, you probably get back to the 200, which again is probably with the breakdown level up here. So, from a trade standpoint, you got plenty of upside, and that's all I'm saying. And that's why I'm saying just because your resistance doesn't mean it has to tank. Like it could pull back to 109.50, 60, 70, whatever, and then it could rip higher again. Okay. There's still a shit ton of people that are loaded with yen longs up the wazoo, right? I mean, you look at the COT numbers and yen, we got to records, okay? And, that's what happens when you get a record. You reverse. Not all the time, but at some point you will, and we have reversed. Gold's broken down. Gold has not held its support. That's one reason I think also that we might suspect that you get a move higher in dollar yen because gold has not this is silver. So gold has not held these, right? 1240, 1230 did not hold. That's important. These levels are now resistance, and this makes the argument that your bigger low probably is not until down here, right? 1180. This is the big support. Okay. So, I think gold is in a bull market. I think gold's bottomed. But your support at this point, probably 1180. And, this median line is probably the most important thing to know about gold at this point. All the stuff that's taken place around it, very important, very significant. So there's that. Crude oil, take a look at crude oil. Crude, still think it might try to top, just going to be a little longer. You've got two equal legs from the low on the CFD at 5106 and two equal legs from the low on the front month continuous contract at $50.01. So it's actually really soon. The high today is 49.60. Okay. So just be aware of those equal legs things in crude. We're getting really close to them. Sentiment's fairly pinned high, pretty pinned high or up or whatever. It's like in the close to 90, I think, at this point. 55-week average on the continuous contract. Haven't hit it yet. Getting close. But really not a whole lot for me to add there on crude. It's just kind of waiting for it to do whatever it's going to do, whether it wants to go to a little higher levels and top or not. But that's what we're waiting for, right? I don't advocate buying crude right here, but I don't really advocate selling it here either. So question here from Matthew. What would I want to see for buy on Aussie Kiwi? Here's Aussie Kiwi. Well, basically, I'd want to see it stop going down to start. You can still get a move down to 104 for all I know. That would be 2 equal legs down from the high. I'm just saying pay attention to it because the other day I said pay attention to it. It's not a setup, it's something to pay attention to because it's at the year open price, right? And momentum is waning on the downside. Like if we were to look at, let's see here. If we were to look at 4 hour unfortunately my data is not downloaded. This is a problem sometimes with TradeStation. Well then, all right, let's see. Still not downloaded, all right. All right, well, we're having problems with this data because it's not downloading. So I can't really say everything I wanted to say. But what you want to see basically one's market stop going down. And so like we had this little key reversal here, right, on the 23rd, Monday. The next day, nice intraday rally, but did not close higher. So I guess it just a simple answer would be like, what does it mean the market stops going down? Well, at this point, I'd say a close over 107.32 be a good start. You do have former low there too, so that would be resistance. Or sorry, former support became resistance. So at this point, kind of have pressure. The market's pressured below that point. I would want to see the market finish up here on a day, and then you would have a setup, or something to work with as far as getting on the long side for Aussie Kiwi. It might be again that you end up simply getting a long Aussie setup, right? And that you end up long Aussie and you're still short Kiwi. That just might be how it works out. And then you're essentially long Aussie Kiwi. But for the Aussie Kiwi exchange rate itself, yeah, I'd like to see the market above 107.30 at this point. So by waiting, we do have something to work with. Yeah, still not downloaded. All right, well, whatever. S&P 500. So when we went through here yesterday, I put out a tweet saying, well, watch this level for support now. The trend line that was resistance so many times. As it always happens, the really good breaks, you don't even get a pullback to test, retest the level, right? It just doesn't happen. You just go. So that's what's happened. There is a bearish possibility on this, and that is that you have 1, 2, 3, 4, 5 leading diagonal, and that you have a flat going on, which is A, B, see this is 3 waves, right? A, B, C, and then C, higher from here. Okay, I'll put in the labels. Problem is, I don't like all the labels on my charts, so I'll end up erasing them. But here's the labels, A, B. So B, and then 1, 2, 3, maybe a pullback in 4, 5. And then that would be C, right? So this is something to watch for. Got to be pretty close to the end of this third wave. I mean, we've taken out everything. And the 2070s area would be nice. I'd still watch that for support. Noted that earlier today on Twitter. So yeah, this is something to watch for, in my opinion. And this fits, I guess, with being at resistance for dollar yen and euro support down here. So not to mention pound yen. Probably, maybe getting a pullback of some sort. So you could get a pullback here, looking at this in line with the S&Ps. And but I'd be, again, watch for support in the 2070s to take the market higher. Yet again, but then this next high would actually be the one that you'd want to position yourself for a bigger bearish outcome, right? So, they say if you can count it, it might be done. In this case, you can actually count a flat pattern developing from this low, okay? So A, B, C, B, 1, 2, 3, 4, 5. So the next two moves on the day but on the week, probably weakness overnight, Thursday weakness, potentially into Thursday's day here in the US, and then a rip higher on Friday to complete this 5-wave move from the low down here, and ultimately a 3-wave move from here on 5-6. So this is certainly something to watch for. Again, don't care too much about calling whatever this is a flat, but these two moves look, pullback, rip, okay? That's what I'm watching for. So I would, kind of consider that with what that means for yen crosses, right? Probably pound pullback, probably a euro rally, probably a dollar yen pullback, yen crosses pullback. Maybe Kiwi falls apart. I don't know. Maybe Aussie goes into the lows of 71.30 on this. We'll see. That's what to watch for. So that's it for me today. Be aware. Obviously, I'll have a swing update out tonight, and I will write one on Thursday. But I'm going out of town. I have not taken a vacation day yet this year, and so my wife and I are going to go out of town from Thursday until Monday, Memorial Day here in the U.S. And so I won't be around during the day on Thursday or Friday. So tomorrow or Friday, I won't be around on Twitter. Just be aware. But obviously we'll have a swing update and everything else published to the website. Okay. So I'm just gonna, let you know. I'll put it on the website too. But that's all. And again, thank you very much, everyone, for attending this webinar. And let me get this updated and archived and on the website. And have a great rest of your week, everybody. And if you're in the U.S., then happy Memorial Day. If you're a veteran, then God bless. Okay, take care now.